Have you ever wondered how interest rates work? Imagine a world where money grows on trees. Well, not literally, of course. But in the realm of finance, that's somewhat close to the truth. Interest rates, in the simplest terms, are the cost of borrowing money. It's like renting an apartment, but instead of a place to live, you're renting money. And just like your rent, interest is the price you pay over time for that privilege. So where does this interest come from? Well, it originates from those who lend the money. These can be banks, credit card companies, or even your friend who lent you a few dollars for lunch. They all want something in return for their generosity, and that's where interest comes into play. Now you might be asking, why do I have to pay more than what I borrowed? The answer lies in the risk and opportunity cost for the lender. Lending money isn't a risk-free game. There's always the chance that the borrower won't pay back. Also, the lender could have invested that money elsewhere and made a profit. So the interest serves as a kind of insurance and compensation for the lender. Interest rates are usually expressed as a percentage of the loan amount, known as the principal. For example, if you borrowed $100 at an interest rate of 5% per year, you'd owe $5 in interest after 1 year. But there's another twist to this story. There are two main types of interest rates, simple and compound. Simple interest is calculated only on the initial amount you borrowed. So if you borrowed $100 at a 5% simple interest rate for 2 years, you'd owe $10 in interest. On the other hand, compound interest also takes into account the interest that has been added to your loan. So if you borrowed $100 at a 5% compound interest rate for 2 years, you'd owe a little more than $10. That's because after the first year, you're paying interest not just on the $100 you borrowed, but also on the $5 in interest you owe. Interest rates are a fundamental part of our financial system. They influence everything from the cost of your mortgage to how much you earn on your savings. Understanding how they work can help you make smarter financial decisions. Remember, when it comes to borrowing money, the lower the interest rate, the better. And when saving or investing, the higher the interest rate, the more money you'll make. So, keep an eye on those rates. And that, in a nutshell, is how interest rates work. They might seem complex, but once you understand the basics, you're well on your way to mastering the art of finance. So come back for more financial insights and tips. Like, subscribe, and turn on notifications. Thanks for watching.